Hey, cool cats. I hope everyone's been doing really well. And I'm kind of doing an emergency market update right now. No editing, just real-time analysis. And I'm doing this because there's a lot of setups that I'm seeing on multiple charts. And it's a lot easier just to do this as a video than trying to make multiple posts. As always, nothing I say is financial advice. And these are just my thoughts, opinions, and cats. So I want to kick things off with Dixie, the dollar strength index. If you've been following along with my posts, you know that this falling wedge here outlined with the upper resistance line in green and the lower support line in green here basically has a breakout target indicating it could go up to over 103. And that roughly 103 to 103.75 or 103.80 area is a very key area of resistance. So it makes sense that we would get up into that liquidity. And right now, already we're getting very close to this supply zone that goes all the way from about 99.40 up to around 102 even. So I would highly anticipate once Dixie gets up into that area, it's going to start probably chopping around more. But again, if that big falling wedge, which really is just a consolidation pattern, if that plays out, it is targeting, over 103 on Dixie. And just for reference, if you're wondering what the rest of these lines are, if you're not familiar with my videos, we have this bearish channel here in blue that goes all the way back to January of this year. We broke below it briefly and then popped back up. And that's because if we zoom out even further, we hit this main trend line here. It obviously acted as support. We came back down and hit it again. And we formed bullish divergence here on the daily time frame where the RSI made an equal low, but the Dixie actually made a slightly lower low. And if we zoom out even further, like on the weekly, we can see just how significant this main support line is. It's never been broken. I mean, this thing started back in essentially like May or April of 2011. So, we just wicked below that really on a monthly basis. And this very well could send the Dixie much higher from here. This 103, I think, is really a conservative target. And it could even end up hitting this other descending trend line, which is pretty dang close to that. So I'm thinking between about 103 to 104 is where I would anticipate that Dixie is headed. And I don't really think the market's pricing in a strong dollar. The market's really been going up on a weak dollar. So if this starts building momentum, I definitely think it's going to create headwinds for the overall market. And if I zoom back in on the 4-hour time frame, the 4-hour, in my opinion, is probably like the most significant before you get up to the daily time frame. And so we're now above the 200 period moving average for that. And as you can see, we've broken above cloud resistance here as well. And then if we switch up to the daily time frame, though, you can see we're still underneath cloud resistance there. We're kind of contending with the 50-day moving average. And I think if we can get above that roughly 99.25 level and realistically probably break above around 99.75, it really could be kind of off to the races and we could see a squeeze on the dollar. A lot of people ask me my thoughts and opinions on the VIX, and this is what I see setting up right now. So if you can see this upper resistance line here in purple and this lower support line here in purple, that is forming a descending triangle, which those tend to break to the upside. In this instance, there is the potential it could break down, but there's this key roughly 1540 to 1550 level that I've been pointing out honestly for months now, that I've been saying that is really your key support level on the VIX. And I think if we get down to there, it makes sense, I'm going to zoom out a little bit more, to see this descending triangle pattern forming into that key support area. And if we take a measured move here and we drag it over, assuming if the VIX were to break out between about, let's say around 19, this pattern is essentially targeting about 25.75 to 26, which ironically would have it also hitting just underneath this previous support line that goes back to February 21st. You notice once we got below that, it started acting as resistance. So it makes sense that we would target that area again as an area of liquidity. But, something that I've noticed is if you look at this descending trend line here that started on April 20, what was that? April 7th, sorry, April 7th of 2025. Once we broke above that, we had a sharp move up on the VIX, but then we hit this multi-year resistance line in dark red, the one I've covered in many videos before, and we chopped around a little bit underneath this resistance line as well, and then pop back down. But notice this support line is holding. There's really not a whole lot more days left in this. I mean, this is like what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Okay, so let's say maybe a month. Like if we were to take this and extend it to the right, it might be a month worth of trading days before this pattern's completed. But if it breaks out to the upside, it definitely is targeting. I mean, this is going to go for, let's say, 26 minus 19. So at least a 7-point move up is what that's targeting. And honestly, as long as we stay above this key area of about 1540 to 15, I think the VIX definitely has a shot at breaking back to the upside. I would not expect it to go back to 60 again unless we have like another black swan event though. Okay, so we're gonna hop over to SPY. I don't know if you saw in the beginning of the video, but we've got essentially an ascending triangle here that's forming on SPY. We did briefly wick below, but then we hit this main support line, this trend line here. And I'm going to shoot over a little bit here so you can see where that goes back to. And I know these charts are kind of messy, but it is what it is. So this support line goes all the way back to part of the sell-off here that happened on March 26th. And you can see when we got up here, we rejected off of it, came back up, rejected off of it again. Essentially, every time we hit it, we were rejecting off of it until we got above it. And now as we came back down and touched it, it confirmed as support. And a measured move of this ascending triangle, if it plays out from where it's breaking out right now, could potentially have it going up to about 637. But I don't know if it's going to get that high because it's going to have to contend with this main resistance line right here. And, we got to zoom way out to even show it, but this is that same resistance line here in red. You can see every time we kind of hit it in through this period here, we just kind of wiggled around and then it finally led to this big sell-off between February and April. But that line goes all the way back to October of 2007, before the great financial crisis here. And, I've shared in previous videos, we've got a main trend line here, we have a channel here, and another main support line here. And it goes all the way back to the GFC. And we'll zoom back in again. I mean, you can see we've got this main resistance line here. Even if we got above it, we still are relatively closer to the main resistance of these channels, somewhere probably about 700 if I had to guess. We're closer to that than we are to support. So could we keep going up? We absolutely could. But I'm going by history, and at least for now, history shows that whenever we touch this line, even though we can wick above it, we can't hold above it. And we're so dangerously close to it, between about 633 to 635, depending on where you'd hit it. And if that isn't convincing enough, I mean, let's even go back to April 9th. If we draw a trend line through there, through all this price action, it acted as resistance here. We came back up, touched it, acted as resistance, broke above it. It acted as support for multiple days, a little over a week. We broke below it again. It acted as resistance, kind of chopped around a little bit. And then we kept touching it, kept acting as a resistance, kept acting as resistance. We pulled back, pushed back up, hit it again. It acted as resistance again. So even if we do wick above this main resistance line in red, there's the potential that SPY could come up and hit about 640 to 642. It depends on where it would hit it. And even that could act as resistance. And if I throw up the Ichimoku cloud in addition to the RSI, I mean, you can see that really since April, every time that once we got above that cloud, it's acted as very strong support every time that it got touched. And we're just kind of bouncing upwards over and over and over again. So that's how important this 4-hour time frame is. Once you start breaking down 4-hour time frame support, that's when you could start looking at daily support to potentially be broken. And so if I zoom out, at least on the Ichimoku cloud, we can see that the beginning of support would be between roughly about 614 to about 617. That's just the beginning of it. That's not very strong support. And if we instead throw up our moving averages, and I'll zoom in a little bit, we can see the 200 is way down here. We've got the 50-day moving average here, the 21, and the 10. We obviously use the 10 as support today. So I think if this starts acting as very strong resistance here, we're obviously going to have to contend with this previous trend line. We'll have to get below that. I would guess somewhere between about 620 to 625. It depends on if and when it comes down. Then you've got a very key level here of 613.50 roughly. And then we may even try to test this 50-day moving average at some point. For people that really wanted this to go all the way back down here again, unless we have a major black swan event, it's just very unlikely to happen. I think it's very unlikely that we would even go below the 200-day moving average again, unless something really major happens. And even this main trend line, this goes back for, I think, a few years. Even this could come down and act as support between about 590 to 600. It all depends on when it gets hit. And I'll just quickly hop over to SPX, the S&P 500 index. Somebody asked me if the main resistance line that goes all the way back to the great financial crisis, like, was that broken above? Yes, it was broken above, but look how we're just kind of chopping here, just like we were back between, basically about December all the way through February of last year. We just chopped around a bunch. We never closed a month above that. And I'll show you that. Zoom in again. We got close, but we just had wicks above it. We never closed a month above it. So I would not be surprised at all if the previous trends play out, to see this get forced back down and us get essentially like a bearish hammer candle at some point. And again, for those who haven't seen my videos before, I gotta zoom way out to even show you, but I'm not making this up. This main trend line does go all the way back to the Great Depression. So it's very, very significant. There's no more significant line than that one. And I almost forgot, because I'm really doing this on the fly, but if you recall, months ago, I pointed out, I said this was a symmetrical triangle on SPY whose pattern target was roughly about 602. We absolutely hit that. And then remember what I said? I said, if this was really a big bullish megaphone pattern, which it really appeared to be, and that was very evident on IWM as well, which we'll get into, the pattern target for that was roughly about 625 to 626. Like we have fulfilled these pattern targets. People that tell you that patterns don't work, they do. If they aren't working, then you're probably doing something wrong. And they're not always going to work, but most patterns have about a 70 to 80% win rate if you chart them correctly. Then hopping over to QQQ, rather than forming an ascending triangle, you can see pretty clearly it's in a very well-defined channel right now. But what's interesting about that channel is what it's barreling towards. You'll notice this thick blue line here, and I'm going to zoom out on the daily so you can see what that goes back to. So that particular trend line goes all the way back to August of 2024. And again, you can see it acted as resistance here. We came down, came back up. It acted as resistance, acted as resistance. We finally broke above it for a little bit, and we ran into this other resistance line. Came back down. It acted as resistance again. We finally broke above it. And you can see that the breakout here was pretty aggressive because you're breaking above that resistance. And then there really, this looks like a game of pickup sticks, but I promise you there really were that many trend lines converging in this area. And it makes sense why there was so much consolidation that occurred between this period of roughly December of 2024 to almost the end of February. There was so much consolidation, and it looked like this was going to be a bullish cup with maybe a little bit of a handle, but this is where the big sell-off really started. And so that trend line could still potentially be active right now. So if if we get up here, we could be looking at maybe around 570 to 572 is where we could potentially see QQQ begin to try to sell off. And then there also was this main resistance line here in white that formed this rising wedge pattern that really led to this big sell-off. So, if we could break this trend line, we could potentially see QQQ even head up to about 588 to 590. One thing I think is very important to note, though, is this main bullish channel in green. I've pointed it out many times before. It goes all the way back to July of 2023. We're back above the support line for that. We can see we contended with it for a little over a week, really struggled to get back above that, but we've confirmed it as support now. So theoretically speaking, we are bullish on QQQ and could potentially go to the top of this channel. I don't think it's going to happen, but I mean, stranger things have happened and this market has been ridiculously bullish. But I definitely think it's important to note, though, if SPY starts rejecting off of that major resistance, I mean, I don't think QQQ is going to just keep pumping while SPY is dumping. So if one starts dumping, the other one's probably going to start dumping too. And one of the major patterns that I really look for, I probably shouldn't be sharing this for free, but I will do it, is I look for a series of double bottoms, what I call diminishing returns. I've kind of mentioned this before, but right here on the RSI, we essentially had a double bottom. We had a breakout from there. Then we had another double bottom. We can see that this was actually hidden bullish divergence, because if we zoom in, the RSI here was made a slightly lower low, whereas price up here actually made a slightly higher low. And like I've said before, what that typically indicates is you're going to have another pump to the upside, but it shows that bullish momentum is waning. And so we had a double bottom here, a double bottom here, and I would not be surprised to see potentially another double bottom here with one final push on the market. And this honestly may even be that double bottom. But I'm expecting to see one final push on the market. And then just like Elliott wave, where you've got like 1, 2, 3, 4, 5, we'll get probably an ABC correction. And how deep that correction is going to be, I don't know, but I would guess it's probably going to be 5 to 10%. And you'll see why I'm saying that here in a second. So I've hopped over to SOXS, which is the daily semiconductor 3X bear ETF. So whatever SOX does, if it goes up, this is going to go down 3 times. And if SOX goes down, this is going to go up 3x that. And so the main thing I want you to see, and this is not financial advice, but I did average into SOXS 10 strike calls, but they're for January. So I've got plenty of time to be right if the market does correct. And this really plays into what I think Dixie is going to do. I think Dixie is going to get strong unexpectedly. The market's not planning for Dixie to get strong. At least that's my thesis. And I think when it adds to those headwinds on the overall market, that's when we could potentially see semiconductors pull back. So essentially, we've got this upper resistance line here in green and a lower support line there in green. I mean, it's as clear of a wedge as you can get. And if you zoom in even further, you can see that here starting on 627, if you connect that to the rest of these lows, that the support for this was kind of tapering up a little bit. And if I zoom out a little bit more, I mean, really what this looks like to me, and I'm going to drag this over, is a lot of times my good trading buddy Dave, who runs the channel Cups and Handles, which I'll actually link in the description below. He's an excellent trader, like way better than I am. But he would probably call this a cup, I'm guessing. Maybe I'm wrong there, but what I would anticipate if this plays out is for this to start tapering back up. And so this target, or this pattern right here, if we take a measured move, it's indicating that SOXS, if this is the legitimate breakout point, SOXS could be headed up to about 1350. And right now we're around 7. So, I mean, we're basically looking at double. And what's interesting about that, and I've shared this in a recent post, but let's go over it in the video, is the last time that SOXS was that high was on May 30th. If we hop over to QQQ, zoom in a little bit, look at where May 30th would put us. So May 30th on QQQ, we hit a low of roughly 512. And interestingly enough, just like I said a second ago, that would have us lining up with this main trend line here. So I think it's a potentially good target for QQQ. And May 30th on SPY had a low of basically 583. So if we come over here, similarly, it would have us hitting either roughly this trend line or that trend line. Those are areas of liquidity. Really, when you see these trend lines, you need to see them as areas of liquidity. When you're underneath something and it's acting as resistance, it's because all of these bulls are hitting a crap ton of sell orders. That's why it acts as resistance. It's liquidity because smart money is getting out at those areas while dumb money is selling to them, essentially. And there's not a whole lot really that can give us an edge in the markets compared to, I mean, everybody knows that there's insider trading. We're not part of the insiders. So really all we can go by is price action. And so, you've got to be able to chart well to know where things are at least likely to reject or bounce from. And, not every indicator is equal, but the Ichimoku cloud, there's a reason I use it so frequently. You can see every single time that the Ichimoku cloud gets touched, it's acted as very strong support. To break through even like the 4-hour support on the Ichimoku cloud takes a very, very heavy catalyst. So just quickly jumping back over to SOXS, I just want to zoom way out so you can see the full chart. It's obviously on a downtrend because the market as a whole is always on an uptrend, but there's definitely areas where you can make a lot of money very quickly if you can get in and out very quickly. So we have this main resistance line. I mean, this thing goes all the way back to December of 2018. You can see every time it's been hit, it's led to a major sell-off. But then there's also this bearish channel right here, where every time we hit this upper resistance, it rejected pretty sharply. If we hit the lower support, it started to bounce. Interestingly enough, with the big sell-off that occurred between February and April, this actually allowed it to break the channel until it hit this main resistance. And so now we're kind of consolidating around this previous resistance line. And if I zoom back in on the 4-hour time frame, and I've thrown up the Ichimoku cloud and the moving averages, you can see it right now. We're struggling to get above the 4-hour Ichimoku cloud resistance. But if we can get above that, I don't think it's just a coincidence that the falling wedge, it is targeting basically this thicker part of Ichimoku cloud resistance. It's an area of liquidity there. So a lot of times when you notice patterns and you take measured moves, you'll find that it often lines up with either key resistance, certain lines, or maybe it lines up with like the 100 or the 200-day moving average. If it's lining up with a key area of liquidity, it's giving you more confidence that that trade's probably going to play out. And the only other thing I want to point out about this is that there is the potential that this comes back down and retests this previous resistance line. It could test it a few times, but as long as this pattern is valid, when the overall market, especially QQQ, hits major resistance, this is going to start acting as support, and then we'll probably break above this previous resistance line here, and we'll be well on our way to, like 1350 to 14. And if SOXS isn't something you're wanting to play, if you're wanting to play with the big boys, so to speak, I mean, you could grab QQQ puts or SPY puts. I mean, it's totally up to you. This is not a recommendation, but I personally would buy time because the market is very bullish right now. It's still very bullish. It's going to have to hit a brick wall before it reverses trend. And because it's been so bullish, there's a very big possibility that even once it starts going back down, people are really going to be looking to dip buy. So we may not see the market come down very low at all, at least not more than like a 5 to 10% correction. But the only other thing I will notice or will mention is historically, whenever we've had this big of a rally, a V-shaped recovery like this, it does need a time, a period to cool off. So we could potentially just trade sideways and then go up, or we could get that pullback that the bears have been kind of salivating over. If you're finding this info useful, please don't forget to like, share, and subscribe. I'm still working on my book, so this isn't something I'm going to be doing often, but I'm still posting regularly on the YouTube community tab, StockTwits and X, if you'd like to follow me on there. And I also post in the Moomoo community, and I've found that they're the most accurate mobile chart that I've found so far. So if you're interested in getting into trading and you'd like to support me, please consider signing up for an account using my referral code in the description below. And as long as you deposit or transfer $100, we both get rewards. But please check out their terms and conditions for their full details of how to get that. But I will say they are absolutely my go-to mobile platform. And although I do my main trading on the Thinkorswim platform, which this is the Thinkorswim platform, Moomoo has excellent mobile charts. All right, we're getting pretty close to the end here. So we're looking at IWM. Remember how I said before that this looked like a very obvious bullish megaphone pattern with a pattern target of roughly 226. Looks like on July 10th, we hit a high of 226.05. So this absolutely played out, even though we had a lot of chop. And, you know, I had pointed out before, there was this main key level here of around 212. Notice how many days it took us to finally break above that. And once we did, we still had to pull back and confirm it as support. And this whole area here between about 208.50 up to about 216 was an area of supply. So I knew that that was going to act as supply and keep trying to force the market down, or we'd at least have to consolidate around there. But we broke above it. Now we're consolidating in this range right now between about 218 up to about 225. And I want to point out that there is this other supply zone between about 227 up to about 233. So you need to keep in mind that once we start getting into that area, if we do, it's very likely to act as strong supply, and we could start seeing some pretty big sell-offs. Even if the overall trend is bullish and we eventually break through it, you typically don't break through stuff like that on the first attempt. And if you do, you usually get a huge pullback because people are just selling as quickly as they can. They're taking profits. And I am going to throw up the rest of my indicators here just so we can get a big fuller picture. So on the daily, we are now above the 200-day moving average. Remember how I said that when we first touched it, it was likely to act as resistance? I was right, like not toot my own horn, but it did. It acted as resistance. We consolidated around it for multiple days here, broke above, came back down, almost touched it. You know, the baseline of Ichimoku is right there alongside that 200-day moving average as well, right around 216.40. So I think IWM is going to continue to try to push higher, but it's very likely to contend with that area of supply, and we are above Ichimoku cloud support on the daily time frame as well for IWM. And out on the weekly time frame, we can see we're moving through the cloud already. We've almost pierced above that resistance, and so there is the potential that if we are bullish enough to break through this old supply and this main line here, we could be headed back up to all-time highs. You do need to keep in mind, let me just switch back over just to the RSI. You have to keep in mind though, this previous bullish channel that it was in, this line could now act as resistance. So even if we get to all-time highs, notice how previous resistance or previous support is going to be lining up with the previous all-time highs. So between about 245 to even up to about 252, 253, we could be looking at some major resistance there if we get that high. And last but not least, I'm going to cover the ADD, the market breadth indicator. I haven't done this in a while. For many of you that say my charts are too messy, I mean, unfortunately, you'll just have to get over it because I leave my lines on here for historical preservation and because a lot of times extended trend lines still hold significance. And the main one that I want you to notice is this red resistance line right here, this descending resistance line that goes back to April 9th of 2025. when we got the Trump tariff pause. So if you notice, and again, the ADD measures the strength of the overall market of essentially all stocks on the NYSE that are moving up or down at any given moment in time. So every time that the market came back up as a whole and either got very close to this resistance line or touched it, maybe even slightly wicked above it, every time it's touched this, it's forced the market back down. And another thing you have to really watch for are, a lot of times I watch for triangle patterns, like we had one right here, or I look for wedge patterns. We had a falling wedge here, we had a rising wedge here. A lot of time these wedge patterns will form into the end of the day. And as you can see right now, and again, this is on the 2-hour time frame, this almost essentially like a rising wedge pattern is forming back up into this resistance line again. So there's one of two things that can happen. Is overall, this could be leading to overall market weakness. And every time the market gets up, it could be selling it off more and more. The other thing that can happen is if the market is bullish enough, eventually we will move sideways enough and we will have hit this line enough times, it will eventually break above it. And I actually wouldn't be surprised to see us get a break above it and then hit major resistance. Anything that is plus 2,000 and above is starting to get into very overbought conditions when it comes to the ADD. So I could see us breaking it and then coming back down later on. So those are my thoughts. And for everyone who's interested, I'm making decent progress on my book, and it's already looking like it should be easily over 100 pages. And again, I appreciate all of you for the support that you've given me for a year now. And the length of this book is going to be, probably way more than I previously thought possible. And I'm finding that as I'm writing down more and more memories, more and more of them are actually coming back to memory. The things that I even had forgotten, way back in my childhood. We're talking like 3 and 4 years old. So I want to wish you all best of luck, cool cats. God bless. And I hope everyone is staying profitable.